Hello everyone, welcome back to our Accounting 210. In this video, we continue with the chapter 7. In the previous videos, we talked about contribution margin, we talked about concept, and then the calculation, contribution margin, and then I said, when you read the question, make sure it's asking about contribution margin per unit or total contribution margin. So we basically got a concept that we said the change of your operating income is related with the change of contribution margin. Why we call it a contribution margin? Because it can be used to contribute to first cover your fixed cost and then go to increase your operating income. So last time we did a little bit work together, but today we continue with this practice. This one is very similar with the accounting lab, the problem one. So now let's get started. Last time we talked about your contribution margin for each unit is 2.5. You use the selling price minus all the variable cost, gives you contribution margin per unit, and then time your units, then gives you total contribution margin. Now we look at question 2 and question 3. So if question 2 said your operating income, what it will be if you sold 160,000 units, right? When we did the first one, we used 130,000 units, but now question said all the others are the same. The only difference is now we want to get 160,000 units, and then how do we get our operating income? How do we get our operating income? Many different ways to work on this question. You know, chapter 7, I personally think is kind of similar with the math. Different ways, you know, all the road goes to Rome, right? So you, I would say, if I can grade your work, you know, using the paper or paper or pencil, I want to say your method, but if we do my accounting lab, unfortunately, since we do the online assignment, we have to follow your textbook format. Honestly, personally speaking, I do not like it because I think everybody has different ways to think. But we are students, right? We are just thinking about how to get A's, how to learn the material in this course. So unfortunately, for this online assignment, you have to follow the textbook format. I want to apologize for that. Okay, so now let's go to this question. Let's go to this question. How do we get our operating income? I said different ways to do that, but based on your textbook, I will also give you the format, you know, of your textbook. We can also look at your textbook to get some idea. General idea is always your revenue. We said for the CVP analysis is the revenue minus all the variable cost gives you gives you contribution margin minus all the fixed cost gives you operating income, right? So we said the revenue, each one, the selling price is $20, and then you are selling at 160,000 units. Variable cost each one is 17.5, and then you also sell 160,000 units. We already discussed, we said your each one, the contribution margin is 2.5. So one way we do it is we can just get the total contribution margin here, 2.5 each, and then we are selling now it's 160,000 units, right? 2.5 each, we are selling at 160,000 units. And we minus all the fixed cost, we minus all the fixed cost. So your total fixed cost has these two parts. We have to minus this one, minus this one. So we minus two fixed cost. Then we can get our operating income. So I'm not going to do the number for question 2. You can finish this by yourself. Question 3. Okay, look at question 3. Said, what would be your operating income? Still asking you about operating income. But the question now here said, if your total sales are $4.5 million, okay? So you will say, how to get this one, right? Think about this, how to get this one. So we have the revenue, we know the revenue is 4.5 million. But do we know the variable cost? You said, each one is 17.5. We are selling at 130,000 units. No. Okay, hey, come on, my students. Okay, now your sales are not 130,000 units because we are working on the new question. We are working on question 3. You know, it's not based on 130,000 units. We got the revenue is 4.5 million. But we don't know how to get our variable cost, right? Let's look at this question. We want to get the operating income. We want to get this operating income. We know the fixed cost, right? So no matter how many units you sell, fixed cost will be just fixed. Okay, so we have this fixed cost. We know revenue is 4.5 million, but we don't know what is our variable cost. We don't know that. We know each one is $17.5, but we don't know how many units. Do you have any idea? I need your help, right? Come on, I need your help. I need the help from my smart 210 students. How do I get the volume? How do I get the units are sold? You said, I think I figured it out. Okay, now share with me. How did you figure out? Your total revenue is 4.5 million. Answer this question. Each one selling price is how much? Selling price is $20. Selling price is $20. So your total revenue is 4.5 million. Your each one is $20. How many units? How many units is sold? You can get how many units you sold, right? One way is you use 4.5 million divided by $20 each. Then you get how many units is sold. And then once you get how many units is sold, you can time the variable cost to get the total variable cost, or you can just use your contribution margin to time the new units, You get the total contribution margin, you minus all the fixed cost, you get your operating income. I have the solution with me from the publisher. I will share this with you, but the textbook, the way they did it is that they use the contribution margin ratio. So let's also put that one there. We said the contribution margin ratio percentage is your contribution margin divided by your total revenue. If you use contribution margin for each, you divide it by your selling price, right? So we said the contribution margin is 2.5, and then selling price is 20. You get it should be 12.5, but your textbook rounded to 13%. Okay, so your textbook got this contribution margin percentage first. We got 13%. And now it tells you your total revenue is 4.5 million. Your contribution margin is 13% of your revenue. So you can use 4.5 to time this 13%, also to get your contribution margin. So if you do this, you will get contribution margin, you minus all the fixed cost, you get your new operating income. So what I'm trying to tell you here is, you can say our selling price is fixed, right? Each one variable cost is also 17.5. Each one contribution margin is 2.5. But the units will be different. The first one, the unit is 130,000. The second one, the unit is 160,000. The third one, you have to calculate the units. But when we have more units, our total variable cost will be different. Our total contribution margin will be different. So our operating income will be different. Okay, so make sure you know one common mistake students have is they just feel like, oh, no matter how many units they are sold, the total variable cost is the same. That's the wrong statement. Your total variable cost changes with the change of your volume. Okay, so hopefully once you get the solution, you look at your textbook, you put that way, as I say, different ways, to get the number, but we are students, we want to get the points. So I would say read your textbook, read the solution I give you, and then put that in the My Account Lab, get the points, understand the material, get A or B in the class. Okay, so next one asking about the break-even point, right? What's the meaning of break-even point? You said that we haven't learned that. That's what we are going to learn in this video. That's what we are going to learn in this video. So that's our learning objective 2. Last time I said very, very important. You definitely will have a question for break-even point. So as a foreigner, I want to ask you a question. As I keep saying, your English is way better than me. So what's the meaning of break-even point? You know, what's the meaning of break-even? If you Google, right? Let me Google now. Let me Google with you. So, oh my goodness, Professor, you are wasting my time. But let's Google break-even, break-even, break-even definition. Okay, break-even definition, break-even definition. What's the meaning of break-even? So break-even is a person or company breaks what the so break-even means something breaks even. What are you talking about? That's ridiculous. That's ridiculous. Break-even means something breaks even. Oh my goodness, I don't like a Google. So anyway, it means you are not earning money. You don't have profit. You don't have a loss. You are just breaks even, right? You are just breaks even. Your operating income is zero. Your operating income is zero. Remember, we did all this example. We said, hey, when you sell this 0 unit, 1 unit, 5 unit, you have a loss. When you sell 40 units, you have the profit. But we said when you sold 25 units, what do you get? You get zero. Zero is a very unique number, right? Very unique number. You are not losing money. From this side, you are losing money. To this side, you are earning money. But in this point, 25 units, you don't earn money, you don't lose money. This is called break even. I don't worry what Google defines break even, but in our course, break even means your operating income is zero. You are not losing money, you are not earning money. So break even point means your operating income is zero. I would personally think it's kind of like you got a C in this course, right? You are not really getting A or B, but you are not failing this class. So you are breaking even. You are kind of breaking even. You don't earn money, you don't lose money, you are breaking even. So our operating income is zero. The sales level at which operating income is zero and total revenue equals to your total expense. Your revenue minus all the cost minus variable plus the fixed equals to zero. So if it's below that, we know that you will have a loss. If it's above, then it's a profit. So 3 ways to calculate. The 3 ways to calculate. One is we do the income statement approach. Second one is we use the units of contribution margin. And the third one is we use contribution margin ratio. We use contribution margin ratio to get a break-even point. Okay. So 3 ways to do this. What should I say? Well, I have a big space here. Maybe I want to write the first method with you. So the income statement, one more time, the income statement is always your revenue minus all the variable cost gives you contribution margin minus all the fixed cost gives you the operating income, So let's look at this example. We look at this and then we do all the 3 methods. You pick one that you like and you just memorize that one. Use it for your exam or for your assignments. Continue with example 3. Okay, remember we have example 3. Someone I think is selling the poster. Okay, so now let's go back. Said you have an online poster currently selling each one. Selling price is 35. Variable cost is 21, and then fixed cost is 7,000. Okay. First question. How many units you have to sell to reach the break-even point? So which means your operating income is zero. Okay, how many units you have to sell? Second question said, how much sales revenue in dollar amount you should generate to reach the break-even point? Okay, so now we think about the first 2. The next 2, question 3 and 4, they are not the same. They said you don't just want to break even. You do not just want to break even. You want to earn some money. So question said, how many units you have to sell so that your operating income will be positive, right? Your operating income will be 4,900, okay? The fourth one, similar, but asking what's your sales revenue you have to be to get your operating income as 4,900. You know what? I think I will take a break and let you do these 4 questions no matter what method you want. I strongly suggest you to do this first, and I'll check my answer with you in the next video. How about that? I'll see you next time. Thank you.